What does China lockdown really mean for us? Goods and products are sitting at the dock and the harbor without getting sent over here. The hardship is just now starting. Welcome back to our channel. This is Elisa Zhang. In today's video, we're going to take a look at what's going on with China, what's going on with its lockdown and its impact of real estate investing overseas here. If you have not heard about this, China has locked down their largest city, Shanghai, for over a month now. Not only that, 44 cities total in China are under lockdown. This lockdown is to achieve the zero COVID strategy policy the Chinese government wants to have to combat the COVID. People are hungry. People are literally locking down in their houses months long without any food. They can't get medical attentions. Their pets are perhaps barely surviving. They themselves are barely surviving. There's many videos on the internet that's starting to surface with this horrendous lockdown that is going on. Today, we're going to take a look at how is that impact real estate investing here overseas. Not only such act is really sad to see, and I myself, Shanghai being my hometown where I grew up, have friends and relatives that's going through this really hardship. Not only that, but it has a way more bigger impact to what's to come in the US economic, specifically real estate as well. So we know China is our biggest trade partners, and it's a global economy now. Every country cannot be isolated themselves anymore without being that part of the global economy. What does China lockdown really mean for us? While the lockdown is leaving thousands and millions of people hungry, its impact is really way more vast than just that. And it will take a month and a year to come. The hardship is just now start. While the lockdown is happening, imagine if you take New York and lock down the whole city. What is going to happen? Shanghai is one of the biggest ports where import and export shipments are at. Simply put, if you're quarantined at home, you're not at work, there's no production, there's no consuming. So goods and products are sitting at the dock and the harbor without getting sent over here. There's usually a delay with these supplies, and we want to kind of take a look at what are some of the material that are major in construction that will impact residential investing, like multifamily, single family, huge in terms of this. So I really predict that there's going to be a price hike due to shortage of supply. But keep in mind, inflation caused by shortage of supply is really not true inflation. It is not a sign that economy is doing well. In fact, it's just simply because supply is so short. So experts are calling this a stagflation is potentially coming our way. So here are a list of materials that we know that is really crucial to our construction, especially value-add strategies. And here are some of the material. Hopefully, our listeners are taking these information and deciding what are the things that they may want to pre-secure, because that shortage is potentially coming with months of non-production in these major cities. So first, patio doors and windows. China's a big supplier for that. Not only that, but also the adhesives. Second, sanitary equipments. This one probably doesn't impact apartment investing too much. Third, acoustic ceiling. So the material used for acoustic ceiling. Fourth is the biggest item, which is a kitchen interiors. A lot of stuff that we do with value add. We may be seeing some shortage of supplies in the near future with dropping stainless sink, cabinets, countertop faucet. These are going to impact the pricing for these items because China's a cheap alternative. Doesn't mean we don't have a supply at all, but also means the margin of the price perhaps goes up a little bit more. Flooring is a big one. Ceramic flooring, laminate flooring, vinyl plank flooring, mosaic flooring, porcelain flooring, solid hardwood flooring, and vinyl plank. They're all impacted. So therefore, if you have flooring material, hold on to them. Maybe you want to pre-plan ahead of time to have these material on hand and then be able to use in your value add projects. Wall panels impacted as well, exterior construction materials, composite decking boards, metal decking railing, PVC decks, stucco code. I mean, the decking stuff is going to impact the single family a lot more because decking existed over there, but this is also extended to stairwares and materials related with that. So stucco code, and stucco mesh, which has to do with exterior stucco. So if you're using stucco smoothing techniques for improving your exterior visual, this may be a material that may be going up in prices in the future couple months. And then also inside the between the walls, that may be an issue as well. Steel framing, which is really essential to building constructions, etc. Paint, we're already seeing a paint shortage right now. This maybe will be more of that. And lumber, specifically softwood. And the other things we kind of want to note over here is in 2021 Q1 compared to 2020 Q1, the total import from US has increased to 69% from US to China. And the export to US has increased 74% from China to US. So roughly they're exporting a little bit more than what we're importing to them. But in 2022, the same period, moving forward 1 more years, we're only at 0.8%. So China's not importing much from the US. And then in relation, there's still export increase of a 16% to US. So that delta is a lot bigger. So China is taking a lot more exports to US and then taking less of our goods. So how does that change when we look at things? You know, Ray Dalio had the changing world orders. I recommend all folks kind of reading about that. It kind of talks about this potentially power shift in the economies. And are we seeing kind of the beginning of this potentially? Because shortage of the supply is going to create increasing of inflation driven by shortage of supply, but economy is really not strong. By pushing the rates up to combat the inflation from the Fed, this can drive US economy into recession. And by doing so, China could potentially come back, rally back, and potentially take out word order. Something to kind of watch out for. One of the examples I want to show is the steel material data that we showed. In 2021 Q1 compared to 2020, the increase is 23.8%. Export increases from China to US, so increasing that supply. And by 2022 Q1 compared to 2021, we're actually driving a negative 13.4% of the export due to shortage of supply, shortage of logistics, shortage of shipments. So this is a big reduction over there, which is possibly seeing some of the shortages of materials over here, driving construction costs even more up. In our previous video, we talked about if you're in new builds, your margin has just decreased significantly. And so that 20% is maybe not enough anymore to cover your margin. You might, if you're designing for your projects for new construction, may have to look at 30% to 40% of margin costs over there. So in general, touching less on your residential apartment building is probably a good play. Investing more in a stabilized asset is probably a better play. Investing value add, that dodging around these materials specifically on operation, is probably a good play. So these are things that you should take away as a passive investors looking at this whole crisis, how this relate to your home or relate to your investment. You should be looking at that. A couple more comparisons that we want to share over here is that things like furnitures, the export has just halved compared to February from March. So you kind of see that immediate impact to the shipments and etc. The iron and steel products surprisingly hasn't really changed too much. In fact, the export has increased slightly month to month from March to February. The insulated wire, the export has kind of kept the steady. So the business plan of adding Wi-Fi's and etc., your apartment, single family home, these are still probably sound strategies. Lamp and fixture, light fixture and parts has reduced 3 times. So this is an area to kind of look for in terms of lighting, LEDs and etc. Good news is there's maybe some alternative to that. That being said, their pricing has gone up as well. Mechanical electrical parts has halved in terms of export from China to here. So we're going to see some electrical products, mechanical products that may be coming in shortage in the near future as well. So these are some of the reports we want to share with you. And if you can proactively plan for these, now would be a good time to kind of take action to get these orders in for your building investments. Now, this combo that was the high oil price, commodity price that was driven by Russia war to Ukraine could be a very much a disaster that's happening, driving to a deflationary scenario in the future. So we're going to be heading on to it. A couple of things we're going to look at is increase our portfolio in fixed rate debt to hedge against the inflationary scenarios, hedge against rising of the rates to combat the inflation scenario. However, if you're in a stagflation scenario, the economy is not really strong. So we're going to see more stock market crashes that potentially comes in. It's going to have impact over all sector. Now, the question is really what stuff to invest in to secure your investment. Again, check out webinars on precious metal. We think precious metal is something to kind of look at. And also well-leveraged debt, specifically hard assets, cash flow assets that are providing neat housing, such as apartment buildings, is also, we still believe strongly into that type of investment. We strongly recommend you to check out some of the content on our website, talk about preparing yourself to make sure that your friends and family are taken care of in both food supplies, precious metal, and then what are the investments that you should be continue investing in this turbulence time. If you like our content, please click on the like below and subscribe to our channel and share this content with your friends and family.